Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. U.S. President Donald Trump warns of a delay in the trade deal with China, saying that China may want to wait until after the 2020 presidential elections to sign an agreement, as they would prefer signing a deal with a Democrat president. The GST Council reduced the tax on electric vehicles to 5% from the existing 12%. Taxes on EV chargers or charging stations has also been reduced to 5% from the earlier 18%. It was a strong first quarter for private sector lender ICICI Bank, with net profit meeting estimates and provisions falling compared to the previous quarter. Asset quality too saw an improvement sequentially. B.S. Yediyurappa took oath as the Chief Minister of Karnataka for the fourth time. He will now have to prove his majority on the floor of the House by the 31st of this month. Meanwhile, the Karnataka Speaker has disqualified 14 rebel MLAs. And over 1,000 passengers were safely evacuated from the Kolhapur-bound Mahalakshmi Express after a torrential downpour and rising water levels brought the train to a halt away from Central Railway's Badlapur station. Let's talk about the action on Wall Street now, where benchmark indices ended the week on a high. The S&P 500 and Nasdaq both surged to record highs, backed by strong earnings from Google's parent Alphabet and Twitter. The Dow Jones, though underperforming the other two, ended with marginal gains. Alphabet gained as much as 12% in the session after beating estimates for its quarterly earnings. And Twitter too posted its strongest user growth in over 2 years, sending the stock soaring by as much as 11%. And that lent strength to the tech-heavy Nasdaq, which, as you saw, ended higher by over 1%. The focus now shifts to the Federal Reserve policy meeting that begins tomorrow, and the decision of which will be known on Wednesday. There's an expectation that it will be a 25 basis point cut, but some Fed watchers are saying it could even be a 50 basis point cut. Either way, it'll be the first cut in over a decade. Let's talk about the Asian markets now. Stephen Engel of Bloomberg News is joining me from the Hong Kong studios. Good morning, Stephen. How are we looking at the start of trade today?
Morning. You know, there's not a big catalyst from that fresh record high that we saw in the U.S. stocks on the Nasdaq and the S&P 500. Again, all investors kind of keeping an eye on the restart, the potential restart of the U.S.-China trade talks, as you mentioned. They're also, of course, watching closely whether the Fed will, in fact, deliver its first interest rate cut in a decade. Still, we had that U.S. stocks record high on Friday, the rally in tech shares that you just mentioned. But here in Asia, it's mostly down arrows, except for Australia and New Zealand. All the North Asian markets are in the red, meaning lower in the early goings. Now, the Korean Kospi is down for a fourth consecutive session, down a whopping 1.4% at this hour. Now, over in Japan, those stocks also are lower. The Bank of Japan also is out this week with a rate decision, with most analysts expecting the BOJ to make a stronger pledge to maintain those rock bottom interest rates, if not, in fact, reveal possibly more easing, if that's possible. Japanese stocks this Monday morning are lower ahead of the restart of the U.S.-China trade talks. They're watching that very closely following that fragile truce, of course, between Donald Trump and Xi Jinping in Osaka at the G20 summit. Neither side we're not getting any signs, really, that they're expecting any kind of breakthrough, as you mentioned. Now, corporate earnings also in focus all this week. Investors remain vigilant of any signs of a global slowdown that may be reflected in company balance sheets. We're getting earnings reports this week from the likes of Toyota, Sony, Nintendo, Samsung in Korea, among the big Asian giants reporting this week. And of course, Hong Kong, right here in Hong Kong, we are on edge again this morning after an 8th straight weekend of protests that involved police firing tear gas and rubber bullets at protesters. And we heard as well from the financial secretary of Hong Kong, Paul Chan, saying this social unrest has affected the economy and businesses, and that unemployment rate could probably rise as a result. Back to you.
Thanks so much for that, Stephen. We're going to talk a little bit more about some of the stuff that Stephen just spoke to you about, starting, of course, with the big talking point, apart from the Fed decision, which is the negotiations between the US and China. US trade representatives will head to Shanghai this week to resume trade talks with their Chinese counterparts for the first time in 3 months. However, expectations remain extremely low of a breakthrough from either side, as both nations are likely to stick to their key demands. Tom Mackenzie of Bloomberg News brings you more.
These talks are going to be fairly tense given the geopolitical issues that you mentioned, how far apart these two countries are on issues like North Korea and Hong Kong, Taiwan, the South China Sea, not to mention trade, of course. And you mentioned the fact that these two sides, of course, are far apart on the trade issue. You do have and have had some jockeying between the US and China to gain leverage ahead of these talks that are going to start in Shanghai Tuesday and run through to Wednesday. You've had the Chinese side, for example, on one hand saying to some of its companies you can look to start buying agricultural products from the US, but on the other side, they have accused the US of being a black hand behind the anti-government protests in Hong Kong. They have continued an investigation into FedEx over some rerouting of packages for Huawei, and they've continued their pretty tough commentary leading up to these meetings, saying that, for example, they do continue to stick to their 3 demands around the trade deal: the removal of tariffs, a 2-sided deal, and less onerous demands in terms of those agricultural purchases. And on the US side, of course, you've had some overtures by Trump around potentially easing the restrictions on Huawei, but on the other side, he's opened up a new front in these trade tensions, or these broader tensions with China around the WTO and China's labeling China as being a developing nation status. That is the status that China has now. The US are pushing back on that. Trump's pushing back on that. So that's another front in the tensions between the two sides. But again, you've also heard, as you pointed to, commentary from the US side as well, saying, look, don't expect any major movement from these trade talks. We want a proper deal. That was Wilbur Ross saying that. A proper deal, going back to what they had back in May, when they thought, the US side, they were about 90% towards a deal. The US want to go back towards that. China is saying it has these 3 points that it wants resolved. So again, the gulf between the two sides just on trade is enormous, and the gulf on other issues, including those geopolitical issues, is also vast. So yes, the best case scenario probably is that these talks take place in Shanghai, and then the Chinese side get invited back to Washington to continue the conversations.
Now, Tom just mentioned, and in fact Stephen was mentioning earlier, about the protests and unrest in Hong Kong. China's top policy office will be responding to over 2 months of unrest in the island city. The administration is finding it difficult to contain the protesters, who continue to remain defiant for the 8th straight week. David Tweed of Bloomberg News brings you a report from Ground Zero.
There were demonstrations here, there were demonstrations in multiple locations in Hong Kong, and that's what's becoming difficult for the police to manage. Just down here, for example, I'm in Sai Ying Pun near the liaison office, but you can see the detritus that was left here last night when they lashed fences together and tried to block the roads. Up there you can see the liaison office. This is the main representational office of the Chinese government in Hong Kong. It was one of the targets of the demonstrators yesterday, and down this alley you can see that they're actually trying to clear away the barricades that they used to try and block the streets last night to stop the police from getting at the demonstrators, but they didn't, because they had to disperse those demonstrators with tear gas, and that tear gas felt right up there in the residential parts of Sai Ying Pun.
And David, today we have the Hong Kong and Macau Affairs Office in Beijing giving its views. This is pretty historic. What are we expecting?
It is historic. It's the first time since the handover that the Beijing office has actually held a press conference. And what's really ironic is that the Standard newspaper is reporting that Carrie Lam herself was attending a PLA summer camp for young people over the weekend. She hasn't spoken since last week. So the fact that actually the Hong Kong and Macau Affairs Office is going to actually speak really is unusual. The question is, will they just limit their comments to condemning the protests and saying it's undermining one country's two systems, or will they be able to come up with some sort of solution? We'll find out this afternoon.
All right, we'll stick with that story and bring you more as and when it develops. For now, let's turn to what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
Start with the UK. Reports from London say the UK is stepping up preparations for a no-deal Brexit at the end of October, with a senior advisor saying that will happen unless the European Union reopens negotiations. The advisor says the government still hopes Brussels will change its view on new talks, but is operating on the assumption that nothing will change. Boris Johnson has formed a 6-person panel to oversee the Brexit process.
I do not want a no-deal Brexit. That is not where we're aiming. But we have to face the fact that at the moment we're being told, as we've been told for the last 3 years, that rien ne va plus. The deal is fixed and can't be changed. I doubt that. But with confidence and friendship to our European partners, we're gonna continue with the discussions, and we're going to get ready to come out on the terms that are necessary.
To France now, the country is pushing ahead with a tax on big tech. This despite President Trump threatening retaliatory tariffs on wine. He slammed what he called the foolishness of a levy, but the French government said it will be implemented anyway. The finance minister insists the measure is not deliberately targeting American companies and says fair taxation of digital activity is of universal interest. To the Philippines now, at least 8 people were killed in a series of earthquakes in the northern part of the country. The tremor struck the province of Batanes, with seismologists recording almost 200 aftershocks. The government has promised about $750,000 worth of aid to the province, with President Rodrigo Duterte describing Batanes as, quote, one of the most treasured destinations in the country. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, it's going to be a very big week for the global economy in terms of where it's heading. The Fed decision coming out in just a couple of days, stuff happening in Asia. But how are we looking here in India?
Right. Well, it's going to be earnings as well, along with the global cues. That's going to influence our markets. And, that's exactly what's moved markets last week as well. But for now, the SGX Nifty is flat. And, we're keeping an eye on how markets have done last Friday. So if we can bring that up as well. And that should come up for you on your screen. About 0.25% gains and mixed moves coming from the broader market indices. Moving on to banking indices. Again, an advance of around 1% for the Nifty PSU banking index. Pardon me. As far as your ADRs are concerned, we have mixed moves, as you can see, but marginal, not too much to speak for. And in terms of the other set of ADRs, we have about 4% decline on Vedanta, and this is largely on account of the news flow that came through with respect to the fact that there was the deal with Anglo-American, and of course we also had the earnings. But as far as your fund flows are concerned, the selling continues. Another 1,500 crores coming through worth selling from FIIs. On the other hand, DI is buying 1,900 crores in front of it. And in terms of contributors, we had a mixed day of trade, and Bajaj Finance, ICICI Bank advancing, keeping in check the losses that we saw in Reliance Industries, HDFC and Infosys. Coming down to your futures and options space, and well, it's a new series, so we are looking at 1.5% increase in open interest for the Nifty futures and Nifty banking futures, seeing about 6% increase in OI. Moving on, let's talk about your range, and for now we just have the 11,000 put is the one with the maximum open interest, establishing a lower end of the range. On the higher end, well, it's fairly evenly poised between 11,500 and 11,800. Moving on, as far as that day of trade is concerned, last Friday, we did see a lot more writing around the 11,300 calls and puts. So I reckon a lot of traders put and took the opportunity to sell that particular straddle. And moving on to your VIX, that's come off once again, now at around 12, so it's being sticky at lower levels. And your Nifty put call ratio, well, that stands at around 1.364 now. Moving on, as far as your stocks are concerned, we have IGL, Container Corp and Biocon, which are seeing surge in open interest. Keep an eye on IGL because we do have some weakness there, and GSPL, Strides Trust and Oracle Financial Services seeing a little bit of unwinding, but on the whole, a mixture of trade and something that we can expect today as well, Alex.
Thanks so much for that, Agam. Now, we at Bloomberg Quint were at the Alpha Ideas 2020 Summit over the weekend, where 20 experts shared one stock idea each for the benefit of the viewers. Yatin Mota caught up with Rishi Maheshwari of AXA Capital and Sunil Shah of Turtle Star at the conference and asked them about the stocks and sectors that they are betting on.
So, what I'm sticking to is something which has been doing consistently well. I will stick to the private sector banks, which I think is doing fabulously, which are doing reasonably okay. And I would tend to believe that the stock price correction over the last few days gives us an opportunity to get into those private sector banks. I'd already spoken to you about the auto sector, which I would tend to believe that in pockets of those is an extremely good opportunity at this point in time, with about 6 to 8 months of view. And as I told you about long short fund, that's the kind of view that we take, about 6 months or so. In both these segments, I would tend to I would stick my neck out and say that this is the right time for me to invest in companies like Axis, ICICI, and auto companies like Maruti and M&M.
Okay. Sunil, to you for the same question, which are the sectors and pockets of strength that you see in the markets at this point?
First, the disclaimer, I guess we are going to talk about sectors and companies. So yes, So this will be. I could have a vested view on what I'm talking because of personal investments and for the portfolio investments. My picks have been very much like what Rishi has been talking about. Axis and ICICI. However, the rationale that I have is the change of management within the company itself.
Okay.
So there has been change of management at the top. Second is if the NCLT cases get resolved, majority of the NPAs have been written off by both these banks.
Okay.
So there could be a write back which would drive their bottom line, which could be a significant upside. And both these gentlemen who have come in respective banks, they have done a lot of changes in terms of people and processes within those respective organizations, Axis and ICICI both. So I think largely the theme remains that business is going to shift from public sector to private sector, but within which this is one pocket of change of leadership, etc., and the NPA write-backs. The second theme that we are looking for investing is more on the gold financing business. Both the companies which are there, Muthoot and Munnapuram, I think they are doing great. Their cost of borrowing is at 9% and the lending is at about 24%. They enjoy a massive spread. The NPAs are negligible, and more importantly is the security of asset. It's like 70% loan to value. The term of the loan is about 3 months. So I think they are not taking asset risk, they are not taking tenure risk, they are enjoying the spread. And again, leverage in terms of last few years, they've expanded their reach. And as we know, the economy is going downhill or is not supportive. More gold loans would certainly be required from the bottom level of the pyramid. So I think that will also play out for this pocket. So apart from corporate banks, we also like gold loan business, which we are sipping into.
Let's move on to some of the big news now. The GST Council approved lower tax rates for electric vehicles and charging apparatus on Saturday. The move comes just days after the government announced tax incentives for electric cars and effectively the buyers of electric cars. Nikunj Ori joins us on the phone line with all the details. Good morning, Nikunj. What do you have for us?
The GST Council has lowered tax rates on electric vehicles to 5% from 12%. And has also reduced GST on their chargers or the charging stations for electric vehicles to 5% from 18%. The new tax rate will be effective from August 1, and there's also been an exemption given to hiring of electric vehicles by local authorities from the goods and services tax regime. Now, this is in line with the government's push for the manufacturing and consumption of electric vehicles. The budget also saw the government giving certain exemptions, certain tax exemptions to the consumers of electric vehicles. Besides this, the GST Council has also extended the last date for availing composition scheme for service providers, and has also extended the last date for quarterly payment of taxes by the composition dealers or those who avail the composition scheme by a month. Over to you.
Thanks so much for that, Nikunj. Right, with that update, perhaps with more electric vehicles and charging points coming up, perhaps you can consider buying an electric vehicle the next time. All right, on to earnings now. ICICI Bank has managed to pull off what very few of its peers have managed to do in the first quarter. The private sector lender reported a drop in its NPA figure and provisioning. Shefali Malik is standing by with the details.
The numbers for ICICI Bank were largely in line with the expectations, with net interest income growing by about 27%, profit coming in at about 1908 crores versus a loss of about 120 crore rupees in the same quarter last year. And the main highlight of the quarter was that the asset quality improved for the bank. Gross NPAs came in at about 6.49% versus 6.70 on a sequential basis. The net NPAs declined as well at about 1.77% versus 2.06 on a sequential basis. The slippages were much lower at about 2780 crores versus about 3547 on a sequential basis, and the double B and below book declined substantially by almost 10,000 crores on a YOY basis and about roughly 2,000 crores on a sequential basis as well. There was some amount of pressure which came in on the bottom line, mainly because of the fall in the other income, which fell by about 11% on a YOY basis and 5% on a sequential basis. The business momentum remained strong for them, with advances growing by about 15% and deposits growing strongly by about 21%. In fact, the business growth was highest in 14 quarters for them this time around. There was a clear trend seen in their deposits. The term deposits grew by about 33%. CASA, however, moved by just about 12%. In fact, the CASA ratio dropped significantly to about 45.2% versus almost 50% on a sequential basis. So those were the main highlights of the quarter, and the management in the media call said that they would not be targeting any particular level for loan growth, but they would be looking forward to profitable market share going ahead. They do have exposure to some of the stress names which have been in focus lately, but their exposure is very, very small, and as of now they don't have any plans to raise the capital.
Now, lack of credit availability and not liquidity is the current problem in the system, according to Sheshagri Rao of JSW Steel. Speaking to Bloomberg Quint's Nikki Machandani post the company's first quarter numbers, Rao spoke about the company's debt levels as well as the factors needed to revive sentiment for the steel industry. Listen in.
Net debt position is around 47,000 crores as on 30th June 2019. We were at 2.73:1, our debt to EBITDA. Debt to equity was 1.35. As our guidance to the market is, we will not go beyond 3.75:1 debt to EBITDA and 1.75:1 debt to equity. So we'll be within that range. Whatever organic, inorganic, whatever we do in the company, we will continue to maintain within that. So there is enough headroom compared to the current ratios.
So I want to know which phase of steel cycle right now we are at, because we're seeing auto slowdown, we're seeing general spend being lower, we are also looking at some amount of liquidity issues overall in the market. Of the three factors, which are the three factors you think could change the dynamics of the industry anytime soon, if at all, if you feel that's a scenario which is likely in the next half of the financial year?
We are more confident about government expenditure reviving, because if you see the budget, there is a huge amount of thrust on the infrastructure, not only on existing projects, but also new projects. So that should give a huge amount of demand, because this project from Mumbai, either you call it as metro or you call it as any other infrastructure projects, so it has a huge potential for steel demand. So those expenditure, once it starts in this quarter, if not in this quarter, in the second half of this year, so steel demand should get revived. That is one hope which we have. As regards to liquidity, I think the Reserve Bank of India and the banks are saying there is enough liquidity in the market or with the banks, but credit availability is the issue today. So the willingness of the banks to lend to the industry, I think, is one of the very important change which has to happen. Whichever banker we talk today, they say about retail or personal loans or credit card payments. Even if you see the kind of increases which we are seeing in the credit growth, it is majorly driven by these segments than industry. I think industry should get enough credit from the banking system in order to really finance the growth and to accelerate the growth. That may take some time. So that's why we're also very anxiously waiting for appropriate steps. We also don't know what type of steps is required to ensure that the credit flow to the industry will come back again.
All right, let's move over to Nikki, who's joining us live to take you through the numbers of Vedanta that missed analyst estimates in the June quarter owing to subdued performance from its aluminium and zinc business. Nikki, the key highlights there. Good morning.
Good morning, Alex. Top line, well, we saw a flattish growth of 3.7% downtick there to a number of around 21,374 crore. And if you look at the bottom line performance too, that shrunk by as much as 12% in this quarter, year-on-year basis. The disappointment essentially crept in from the operational performance of the company, which was down by 16% at a number of 5,198 crore, which was a 6 to 7% miss as compared to a number of more than 5,500 crore. Margins for that matter also contracted to 24% as compared to 28%. Essentially lower LME costs. Along with that, we saw some kind of lower than expected performance coming in essentially from Zinc International and aluminium business, which waned on the profitability of the company. This to an extent was partially offset by stronger rupee. If you look at the segmental performance of the company, Zinc India has already reported the number there, so there was no set of surprise in that particular segment. Zinc International, that's where the disappointment is crept in from. 128 crore, it implies a 52% kind of uptick, but it's way below than compared to an estimate of around 258 crore. Oil and gas business there, the performance was roughly in line. Aluminium division again, there we saw some amount of disappointment. 392 crore, the number was that, a decline of 8%, and it was a little lower than what we were estimating. It was 262 crore for aluminium business as compared to 179 crore. So there was some sort of a little difference in the estimates there. Power business was essentially better than estimate. Iron ore, steel and copper India for that matter, all of them reported a better than estimates number. What brokerages essentially make out of this, none of them actually revised the rating or for that matter target price. Phillip Capital said that there was a subdued performance coming in from the aluminium and Zinc International business. The only silver lining that they saw was the robust volume growth. They also specified a little bit about net debt, which was a cause of worry for them on sequential basis. Edelweiss Securities maintained the hold rating. Target price remains unchanged. Says that it was the ramp-up, so slower ramp-up of oil and gas division, which has actually led to this disappointment. They do see some amount of positive coming in from the maintenance of guidance of FY20, despite the slowdown that we've seen in oil and gas division typically. Axis Capital, that also maintained the ad rating, and the target price remained unchanged. It says that decline in EBITDA was due to lower LME prices and higher input costs, and they however have reduced the FY20 and 21 EPS to rupees 15 each in these 2 years from 18 and 16 rupees earlier. Alex, I'd like to make a point here. All of the brokerages have kind of brushed aside the results, but they've really taken a heart out of his unwinding of the Anglo-American, the investment in that deal. That's probably gone down well for Vedanta. Net-net, it was a nothing sort of quarter for Vedanta in that matter.
Absolutely. Thanks so much for that, Nikki. All right, another nifty company that comes out with numbers today is Dr. Reddy's. The pharma major is expected to post single-digit growth in its revenue and bottom line. Margins are expected to stay flat around the 21% mark, but 2 new launches will aid the numbers sequentially. And while the management is hoping to see a growth pickup in Europe, it may not have fructified in the quarter gone by. But we'll bring you more as and when those numbers come in, and we'll bring you the analysis of those numbers when they do come in. But for now, let's turn to Mishika Parak, who's joining in to tell you all about the stocks in news. Good morning, Mishika. What's on your list today?
Good morning, Alex. Let's first start with the important results. First on my list is Vodafone Idea. The company came out with results that were below estimates. EBITDA jumped 2 times due to adoption of the new IND accounting standard 116. There was a net loss of about 4,874 crores due to exceptional losses in this quarter, and the ARPU improved as lower ARPU subscribers exit from the company. Then we have Havells. Again, their results were below estimates, mainly due to the Lloyds and Switch gas segment. The management points to a weak outlook, citing real estate slowdown and liquidity squeeze. Now let's have a look at the stocks that we need to watch out for. The first one's Cadila Healthcare. They've received Form 483 with 0 observations from the US FDA for its API manufacturing facility at Ankleshwar. IDFC has decided that it will not proceed with selling its entire stake in IDFC Securities to Chatterjee Group. It will continue to look at other options to sell its securities business. In Power Mech Project says Andhra Pradesh government cancelled order worth 572 crores given to the company. The company stated that since no construction activity was commenced, there will be no implications on the financials. Lastly, we have Indiabulls Housing. They said that they have loans outstanding as on date from National Housing Bank to Indiabulls Housing are 0, and says that it has never taken any loan or refinancing facility from National Housing Bank. Now, this was Indiabulls' clarification on Subramaniam Swamy's letter on money laundering.
Thanks so much for that, Mishika. Well, over 1,000 passengers were rescued from the Kolhapur-bound Mahalakshmi Express by the Navy and the NDRF. The train was stuck outside Mumbai's Vangani station from 10 p.m. on Friday night. Passengers were finally pulled out after a 5-hour rescue operation that could only begin on Saturday morning due to the inclement weather. Take a look. All right, on to politics now, and with a new spelling to his name, B.S. Yediyurappa made a new beginning as Karnataka Chief Minister. Yediyurappa was sworn in by Governor Vajubhai Vala after the Congress-JDS coalition government could not prove their majority on the floor of the House last week. Take a look. All right, lots that you can find on the website bloombergquint.com. Let me take you through just a couple of stories. The government is planning initial public offerings of 3 to 4 financially strong regional rural banks on stock exchanges in the current financial year after the conclusion of a merger exercise which will bring down the number of banks in the space to 38 from the current 45. And Reliance Jio Infocomm won more subscribers to become India's biggest telecom operator as companies prepare for the planned rollout of a 5G network next year. Reliance Jio's subscriber base grew to 331.3 million in the quarter ended June. That's all you need to know going into trade today. Do stay tuned though, there's a lot more coming up over the course of the day. This is Bloomberg Quint.